As first-time homebuyers, did you know that you're going to get 2 tax bills in the mail after you purchase your home? What's going on, you guys? My name is Michelle, and I help first-time homebuyers save money, and I help them make the process smooth. Check the link in the description if you'd like to connect with me. Today, I'm going to demystify a very important aspect of purchasing a home that I feel that every homeowner, especially first-time homebuyers, should understand. It's property taxes and supplemental taxes. If you are in escrow right now, or you're just doing some research about purchasing a home soon, this video is for you. Let's start with understanding your property taxes. You know, property taxes are essential. They fund public schools, public services, just to name a few. So today we're going to focus on the Los Angeles County Tax Assessor. If you need to look at your personal county's information, you can go ahead and Google them online. But today we're going to have an emphasis on Los Angeles County. All right, so the first thing I want to share is understanding your property tax bill. And by the way, these links that I share are going to be in the description. So this link here, I'm not going to play the entire video, but it does go into detail about where your property tax, where the money goes to. It goes to local governments in your county, which includes the city, county, special districts, and schools and community college districts. So here is a copy of the tax bill. So this is a sample of a tax bill. Taxes are due November 1st and February 1st. They give you some time to pay them. For example, November 1st, they're due, but they're late after December 10th. So they give you a little bit over a month to pay for your taxes. And the same thing goes for the February taxes. They're late on April 10th. So they give you a little bit of time to pay the taxes. So if you have purchased a home, you have either done one of two things. You have either got an escrow account or you opted out of getting an escrow account. An escrow account is when your bank pays your taxes and your insurance on your behalf, and it's included in your monthly payment. So that's option number one if you get an escrow account. Option number two is if you elect not to do that and you elect to pay for your taxes separately, then you're going to get two bills. Either way, you're going to get the bills. If you have an escrow account, you do not have to pay them because your bank is paying them for you. If you opt to pay them on your own, depending on when you sell, sometimes it's going to be due in the next couple of months. So it's definitely something to account for. There's a website where you can go on if you're currently in escrow, if you're going to be in escrow, where you can check when your taxes are going to be due. And I'll go ahead and put that link down below for you. Also, there's something else that you have to be aware of. This will catch you by surprise if your realtor does not tell you about it. It's supplemental taxes. Supplemental taxes, whether you have an escrow account or you do not, you have to pay them no matter what. Your bank, if you have an escrow account, will not pay them for you. You have to pay them. So let's get into some basics of what supplemental taxes are. Supplemental taxes are assessed when there's a change of ownership or new construction reflecting the updated property value. And you get these supplemental taxes once, maybe twice, but no more than twice. So what happens is this. So the county tax assessor is really behind, and it takes them almost about a year to update the tax bill from the previous owner's name into your name. So when you get the first tax bills, you're going to also notice it's not in your name. It's in the previous owner's names. So 9 times out of 10, especially here in LA, or in any of the surrounding counties in any of the surrounding counties in LA, the price you pay for your home is more than the price that the previous owners have paid for their home. So there's going to be a difference. So when you get the first tax bills in the previous owner's names, it's for their taxes that they paid, because property taxes are calculated based on a rate on, and every county is different. So for Los Angeles County, it's 1% plus. There's also special assessments depending on where you live. And in some areas, there's Melrose taxes. So the total tax rate is going to be different for depending on, again, where you live, what city it's in, and all of that good stuff. It could be more or less, but it's going to be their tax bill that you're going to be getting. Again, you do have to pay it if you do not have your escrow, your bank paying them for you on a monthly basis. That's the traditional property taxes. Now, when you get your supplemental tax bill, let me show you what that's going to look like because it's going to be different. And this should be in your name. Let me show you what they look like. Okay, this is what the supplemental tax bill looks like because on the top, at the very top, it's in green and it says supplemental secured property tax bill. And it's going to show two amounts. Sometimes you get one amount and another time you're going to get a second amount. And I'm going to show you in a minute where to look for that when you're in escrow because you're going to get a report that's going to show you all of the tax information. So this is a supplemental taxes. So this right here, you have to pay no matter what. So it's going to seem like it's a lot. And this is why property taxes can be confusing, especially if you've never paid property taxes before. It's like, hey, why am I getting two separate bills? It seems like a lot, but remember, the first one you're paying what the previous owners paid, and if they bought the home for less than what you paid, the percentage and the calculation that the tax assessor is using is going to be less than what you're purchasing the home for. So there's going to be a difference. Let me give you an example. Let's say that they purchased the home for 400,000 and you're purchasing the home for 700,000. And let's say the tax rate is 1.25%. So 400,000 times 1.25% is $5,000. That's $5,000 that the previous homeowner is paying. Okay. So next, let's go ahead and calculate 700,000. 700,000 times 1.25% is 8,750. So let's subtract 5,000 from that, and that's a difference of 3,750. So your supplemental taxes are going to be 3,750. The numbers make sense, but how it's organized and how the county delivers it to you is very confusing. So I just wanted to bring some clarity to you surrounding property taxes so that you don't be alarmed and that so you can prepare for them in advance. Now, let me show you how to prepare for them in advance. Okay, when you're in escrow, you're going to get what's called a natural hazard disclosure report. This report's about 30 to 45 pages. You're going to want to get, now this is a pro tip. This report comes in a few different variations. This is just the straight report and disclosure, and it goes over like if the home is in a flood area, a high fire hazard zone, wildland fire area, earthquake vault zone. So this is just basically like the natural hazard disclosures around the area. But then there's another report you pay a little bit more, and it gives you the tax info and the environmental information. So when I represent my first-time home buyers or just any people purchasing a home, I get the most expensive one, which is the most detailed one. And so that's what this one is. And so I want to show you. And also when I'm representing sellers too, we make sure and we give all of the information to the buyer. We get the most expensive one. And the reason being is because you want to fully disclose everything, right? You don't want to leave anything out. You want to make sure that you're fully disclosing everything to the property, everything about the property. This is doing good business. So let me go down to let me show you tax information because this is exactly where I want you to go when you're in escrow. This is going to be a report that you're going to get during the first week. So you want to go down where it says tax information, and you're going to see here if there's Melrose within your community. If there's an Improvement Bond Act of 1915 lien assessment, this right here says there's no Melrose and there's no lien assessments. And if this property has been assessed for any clean energy efficiency programs too. So it gets very detailed, but let's go ahead and click right here. Let's go straight to page 2. This is going to be all of your tax information to really pay attention to. So the percentage is 1%. The tax rate is 1%. However, there's other district assessments. This is what I was talking about. And this is why 1.25 is a typical percentage that realtors and lenders use to calculate property taxes, because if you add all of this up, then the 1% is actually different. It's going to be like 1.3 or 1.2. It could be 1.1, depending on the other assessments, especially if there's Melrose. It could be, I'm selling a house right now that has Melrose, and the base tax rate is 1%. But if you add in the special assessments, including the Melrose, it's 2.12 that people have to calculate. So, but this talks about, and this also talks about where is your tax dollars going to? Right here, it's going to the ambulance service, the fire protection, the firefighters, water, mosquito surveillance. It tells you exactly where it's going to, and of how much. The water district right here, the county of San Diego. Okay, so there is a supplemental tax estimator. This is where I would definitely want to direct you guys to go. So let's put in a street address. Let's just put in any address. Let's just see what comes up. Get estimate. The total tax rate is 1.19 or 1.2. And it looks like you're going to get 2 supplemental tax bills. The first one is going to be for $270, and the second one is going to be for $1,360. And the billing periods are notated here. So in total, your supplemental taxes are going to be 1,630. So I would definitely keep this in mind, because you're going to want to save this money so that you can pay your supplemental taxes. Okay, so let me give you a pro tip. Remember to save this information and come back to it when the time is right for you, because you're definitely going to want to revisit this after you close escrow. You're going to be like, what did she say about my supplemental taxes? That I can call who? When you get your supplemental taxes, get your mortgage statement and call the number. It should be your escrow account. Call your bank and ask them, say, hey, how much do I have? Do I have an overage in my escrow account? My supplemental tax bill came, it's X amount, and I would like to use any extra money that I have in my escrow account to pay for the supplemental taxes. And if you do, ask them if they can please mail you a check, or however they do it. Every bank might be different. They might be able to wire it directly into your bank account, but either way, ask them to send you the money so that you can use that money for your supplemental taxes. Do that first before you cut them a check, because you may have an overage there. So you guys, that is it. That is the basics of supplemental taxes. If you guys have any questions, please leave your questions down in the comment. If you have found this video informative, give this video a like, and feel free to share this with anyone that you feel might need this information. Once again, my name is Michelle, and I'm here to make home buying easy. I'm here to make it go by smooth for you, and to be a guide in truly helping you with your home purchase. Take lots of care, and I'll see you in the next video.